Hello and welcome to Follow the Money. I'm Robert San. Here we uncover the stories and strategies of how money really moves. Today we zoom in on the state of the Philippine economy, a mix of challenges and opportunities as we head into 2026. From inflation and interest rates to global risks and local resilience, we ask, what should Filipinos and business watch closely in the months ahead? And joining us is Carlo Asuncion, Chief Economist of UnionBank of the Philippines. Good afternoon, Carlo. Welcome to the show.
Good afternoon, Robert.
Carlo,
Thanks for having me.
Carlo, let's start with this. If you had to describe the Philippine economy in one word for 2026, what would it be and why?
Well, if I have to pick one word, it's resilient. We expect the economy to grow by about 5.7% in 2026. It's steady, but it's not spectacular. That's driven by strong services, young consumer base, a gradual relief, of course, from high interest rates from the past year and a half. But of course, resilience doesn't mean it's risk-free. So there are four points, four things that we're watching right now. First is the impact of U.S. tariffs. It could slow exports, supply chains, and there are a lot of analysts that are saying that really the impact is going to be in 2026. So we're watching that.
Now, besides the impact of what you mentioned in terms of U.S. tariffs, are we seeing effects of what's happening right now locally with the economy in terms of also the investigations in terms of the alleged corrupt practices in flood control projects and also the protests that happened yesterday? Are we seeing effects today, and will we see also effects in the coming weeks?
Yeah, well, actually, one of the four things that I was going to mention was the flood control and certain corruption issues that has been in the headlines. So it could actually stall, some spending, public spending, and of course, with if the results of the investigations are left wanting, that could also add to political risks ahead. So this is not just a one-time thing. It could take time, and we're watching that closely. And of course, another one would be climate change, impact. It's now like we're watching the impact of Super Typhoon Nando, and the news is just trickling in. But this is not going to be happening not just now, but it's going to be happening very frequently.
Now, Carlo, between inflation, interest rates, and the peso, now which should Filipino workers and possible investors watch more closely now in the next 6 months?
Inflation. Inflation would be the first domino. So if food prices they stay calm, food and energy prices, the BSP can ease gradually. And if the peso stays within the range, then that would be fine. But also, climate shocks, are also can actually push food prices up as well, and possible jitters, from tariff headlines and what was mentioned earlier, fiscal paralysis. That's what we're calling it right now. Potential fiscal paralysis if flood control issues freeze spending, and price pressures can linger. So you have to watch prices first because they steer both bond rates and the peso.
When you say fiscal paralysis, what effects does this have now with the economy in terms of the different sectors, the different sectors of the economy?
Yeah, well, of course, we've been harping, the government has been harping on Build Better More, and that has been the case for even before, what do you call this administration, Build program. That has been the slogan, and of course, that has been us in the economic analysis business has been, looking at that and how it impacts growth in general. So I think that if these issues are not resolved quickly and the results and investigations are left wanting, then of course there's a potential for spending to slow down, because we know that even the 2026 budget for the DPWH is already 252 billion less. No, so that's quite a huge number that you're looking at. Of course, it will be funneled, hopefully, in other government agencies that would, spend those money for the economy to grow.
Now, with all the observations and the research with regards to the economy, now, if we look at economic forecasting, it's not really about direction. It's more about direction, not precision. Now, what early signals do you see or can tell you if we're headed up, down, or sideways?
Yeah, I have three. No? So you have food price pulse versus the weather. So if rice and vegetables stabilizes or prices, despite storms, then real incomes will hold. No, another one will be you're looking at PMI, orders and hiring. So that's very important. And also, if you're looking at credit flow, because that's bank SMEs approvals, loan growth, that's basically your oxygen for expansion. No, so those are very important three things that you look at. So that's food, orders, credit. So green means go, of course, red means slow.
Now, Carlo, you mentioned credit flow. In terms of providing credit to small businesses and for them to expand, what is the access like? Is it easier access now for small businesses to gain credit for expansion, or do we still see some setbacks in that part?
Well, we have still seen some setbacks. No? Of course, there are challenges because of the high rates so far, but of course, we've seen it go down. No, I think, if I'm not mistaken, about 175 basis points already. So I think the market is ready, for more loans to be lent out.
What kind of policies or measures do you think the government should do, or even with the help of the private sector, for small businesses to have an easier way to get credit for expansion? Because right now, with high prices of goods, electricity, and all the things that a business needs, a small business, they're still feeling the pinch. Now, how can the government right now and the private sector help ease that and let these small businesses be able to tap into easier credit for them to expand?
Yeah, I think we have more than enough already, or more than enough already policies and support for small, medium enterprises. Now it's just execution that needs to be done. No? So I think that's where we have been lacking for quite some time. So I think that in terms of execution, that's where we need to improve.
If you were to pinpoint one policy that needs to be done right away, what would it be that hasn't been executed yet?
Yeah, I think always been happening, the lending out to agri. So that has always been a challenge because of of course, the lack of credit background, etc. So the risk is high. Of course, hopefully with technology we can improve that. With the access of credit to agriculture SMEs.
Now, looking at global risks like oil prices, climate shocks, you mentioned climate change and geopolitics. Which could most shape our growth in the next year?
Climate shocks, I would say. Climate shocks would hit fast, and it's local. So they can move prices and disrupt logistics within weeks. Oil is second. Higher fuel lifts transport and power costs. Then geopolitics and trade. That's including, of course, U.S. tariffs, for example, in 2026, which may soften the export momentum. So each risk can feed into inflation, confidence, and jobs. So the pass-through is very real.
In your observation as an economist, do you think we're doing enough to mitigate this and to lessen the shocks?
Yeah, well, one example is on climate change. That with this problem of flood control, they're saying that it's because of the water, the amount of water that is being churned out by nature is rising, which I think is very true as well. But of course, there is what you call climate change resilience that has being preached all around. So I think that we haven't responded that way. Instead, because of weak governance, no, weak. Uh, well, we've known that
Mhm.
now. No, so a lot of the people are taking the brunt of the impact of climate change.
Okay, Carlo, we still have a lot to discuss regarding the Philippine economy, but we'll take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is Carlo Asuncion, Chief Economist of UnionBank of the Philippines. Now, Carlo, right now the government budget and spending is being scrutinized. But if we're looking at government spending now, how much of that and fiscal policy will drive our resilience in 2026?
Well, it can really be a tailwind, no, if the execution, that word again, is steady. Yeah. So if early on predictable infrastructure disbursements, legit, that is, no, it can support jobs. It can support even it can allow the crowd in of private capex, as they say. The risk is a spending freeze, of course, and you even add that political risk if there are questions about investigation. So that could be a real problem. But the fix is transparency, no? And on-time disbursements and clear project pipelines. And that would really help growth in 2026.
How much will the call for transparency and accountability in terms of government spending in not only the DPWH, but in other agencies and transparency that will help boost the economy?
Yeah, well, I think I made mention that, it has to be continuous, no? And, I heard one comment the other time, or just this morning, that he felt like they let up. They started with Napoles,
Hmm.
starting with the PDAF and everything, and then they felt like they let up, just watching and asking for accountability and all those things. No, so I think that with these things happening from top to bottom, we know that government people are saying that. So we have to keep on. You have to keep on asking for accountability, asking for uh, uh, people in government to be transparent, to be
Yeah.
open
Well, I guess it's
about
already there, and
people's money.
I guess we have to deal with that and see what happens, I guess, in the next couple of weeks in terms of investigations. But, Carlo, I want to look at the young generation. The Philippines has a young and dynamic population. Now, how do demographics now and the rising consumption, how can that shape the outlook for new entrepreneurs in the younger spectrum?
Yeah, I think the average age is 25, so that's very young. No? So you have more people now earning, young people, and not just earning but spending. So you have to pair that with digital habits. We know that they're online all the time, the digital nomads and all. So e-wallets, delivery, online shopping. So that creates a steady demand for affordable and convenient services. So there's opportunity in everyday essentials, logistics, health, education, tourism, no, and simple digital tools that can save time and their money. So, however, of course there's some risk as well, weather disruptions, policy noise. So, for entrepreneurs, they have to design their supply chains and pricing that can actually be, flexible and that could be agile.
Now, looking at our entrepreneurs, now, if business owners could track only three numbers each month, which would you choose and why? What should they look at?
Yeah, that's a good question. So, um, food and power inflation, again, inflation, because that's input costs, and of course, that tracks your customers' spending power. Uh, of course, the policy rate, the lending rate, that drives your financing cost and supplier credit terms. And then the dollar, sorry, the USD PHP. So that moves import prices, export competitiveness, etc. So those are kind of the three things that you have to watch out for.
In your observation, do you think we'll be seeing more entrepreneurs the younger generation becoming entrepreneurs and growing and helping build the economy?
Yeah, for me, I see personally really growing because that's one thing that the Philippines lacks really, the innovation in terms of rising entrepreneurship, ideas, and how now that AI is growing, AI, augmented intelligence as well, it provides you with certain ideas. If you just input it there, prompt it right, you have new ideas, business that you can, even map out in 12 months or 6 months, whatever it is. No, so but the opportunities are there for younger generations to be entrepreneurs, and I think it's an exciting time. If you're gonna look at it.
Now, you mentioned there's opportunities there, especially in the use of AI. Now, how can we better leverage that technology and create more education in terms of people using it and not being scared of it, looking at it as a tool? I've heard some say AI, a lot of workers are scared because AI might take their jobs away. So what kind of education or learnings must we have in terms of trying to use this as a leverage and, again, take the economy to the next level?
Yeah. Well, first of all, stop using it as Google, like Google.
Yeah, a lot of people are doing that.
Yeah. Well, for me, I've been like asking those things, early on, but as part of Union Bank, because it's encouraged in our group, encouraged to use it and to be able to even automate our reports. I'm actually asking it to how can I automate this daily report of the market, for example. Give me a bit of insight if you can, and then be able to augment me with the intelligence that it churns out.
What kind of education do we need in terms of how we use AI? I've heard a lot of those teaching prompts, learning prompts, how to ask the right questions to get the right answers. What kind of education do we need? Are we trying to see what other countries are doing to see what we can do also using best practices of what they're doing?
The internet is just full of a lot of what do you call it, tutorials about it. Really, instead of spending time actually, well, not wasting time, I would say, with micro
Yeah.
reading, as they say. No, just just explore it, and do it. I mean, explore it with just with an inquisitive mind, and how can this thing help me with my work or improve my work, or how can this really just help me, and ask that, and don't be afraid that it will replace you, because it won't, because it still needs humans, I believe.
And just a question for our viewers: what practical move should our audience take in the next 90 days to follow the money to stay ahead?
Yeah, well, I think with one thing is you have to lock in resilience now. For workers, households, clear your highest interest debt. Rebuild a 3 to 6 month buffer. For OFW families, time your conversions. And cut fees, so more of the dollars that you get reaches home, or or even automate your savings first. No, for MSMEs, no, sit with your bank, reprice or term out lines. No, keep 60 to 90 days cash intact. Diversify suppliers if needed, customers, especially if you're going to face the U.S. tariffs or project delays. So I think that's one of three things that with three different kinds of people moving
Yeah, it's
forward.
good advice for at least for everyone to move forward. Now, Carlo, let's now go to our rapid fire questions. You just have to answer yes or no. You don't need to explain your answer. This is the fun part. Okay, let's start with this. Will your Christmas bonus finally outpace inflation this year? Yes or no?
No.
No. Okay, is the peso secretly plotting against our wallets?
No.
No. Okay. Can we blame global oil prices for every bad day?
Sometimes.
Okay. Are investors really just guessing most of the time? Yes or no?
Yes.
And finally, complete the sentence. Money is the root of all.
Evil.
Okay. Thank you, Carlo, for your insights, and hopefully our economy will have a positive uptick in the next couple of months. Thank you for joining us.
Thank you. Thank you for inviting me.
And when it comes to the Philippine economy in 2026, the words of John F. Kennedy offer a timely reminder. Geography has made us neighbors, history has made us friends, economics has made us partners, and necessity has made us allies. The Philippine economy will enter 2026 with questions on inflation, interest rates, and global risks that will shape our growth path. From government spending to demographic trends, the choices we make today can determine whether we seize opportunities or face new pressures. And as Carlo Asuncion reminds us, reading the signals early and staying disciplined can help businesses and investors stay ahead. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.